The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 14th fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call giving and sharing and being generous. You know, it's best to start the discipline of generosity when the amounts are small. Think of it like this. Much easier to give 10 cents out of $1 than it is to give 100,000 out of $1 million. Giving is also better than receiving because giving starts the receiving process. You see, nothing teaches character better than generosity. Now, for those of you that don't have money to share, well, then share ideas with others. Yesterday I mentioned it, I'll mention it again. You know, if you share a new, maybe it was a couple days ago, if you share a new idea with 10 people, they get to hear it once, you get to hear it 10 times. Now, if each of you told 10 people about TFNN, think about that. Think about the services that we provide to you, and all we would like you to do is just simply be generous. Be generous. Tell 10 people. If you told 10 people about TFNN, we would easily overtake any financial news network station that's out there. Something to think about. And finally, sharing makes you bigger than you actually are. The more you pour out, the more life will be able to pour into you. So as we begin Fantastic Friday and as we ready ourselves for an extraordinary, outstanding weekend, that's what I want you to have. Please share as much as you can. Give as much as you can, because when somebody shares, everybody wins. Thank you for sharing your time with me. Let's kick things off here. Right now, we've got Dow futures off about 26 points. They're trading down at 16,089. S&P futures off a couple of points, trading out at 1844. NASDAQ futures off a point, trading at 3650. Boy, big movement here in high-ho silver. You got silver up 52 cents, up 2.5%. Right now, it's trading out at 2172. Gold is up 0.8%. It's up $11. It's trading at 1383. Light sweet crude up about 75 cents. No, that's about 75 cents, trading out at 98.99. Natural gas up 3 pennies. A quick peek around the globe. Let's see what we have going on over in Europe this morning here. DAX trading out 48 points, off 0.5%. FTSE down 33 points. It's trading out at 65.20, both about 0.5% to the downside. In Asia last night, the Nikkei blew all 4 tires, down over 3% off 488 points. The Hang Seng off 216 points. That's 1% to the downside. And 0.75% to the downside was the Shanghai, closing out at 2,098. Our call-in number, 877-927-6648. Give us a call, folks. Would be happy to speak to you, help you out, answer whatever question I can. Let's go start by taking a look at, what should we take a look at? Let's look at the Yes, but actually, if you're watching us on TigerTV, my screen here is broken into 4 different quadrants. The lower left happens to be the Euro-Japanese yen. What you'll see is it made a little expansion, 1.272 expansion. That took place here at the 9 o'clock session. It's small, but what I want you to notice here is you can see that we had the ES Mini really doing the exact same thing. So at 9 a.m., it too was making a 1.272 expansion of its set of swing points out there. That really just helps you to understand the correlation between the currency pair of the Euro-Japanese yen and our stock market. Nothing like it out there. You don't have to trade the currency, but boy, you sure want to know what is going on with regard to that currency pair. Now, that's what's going on. In the upper right-hand side, you've got Goldilocks. We'll take a look at gold, silver here. Let's actually, we'll go take a look at the ES Mini momentarily. Let's switch over and take a look at gold. Now, what gold is trying to do today, which it's only done really for, this is a daily chart, which is only done for 2 days in essence. in quite some time is trying to break the channel line. That's the red diagonal line that you see coming across my screen out here. That area is acted as resistance. We'll see if it does today. Now, what it's also running into, it's running into the 200-day exponential moving average. That's the black squiggly line coming across my screen out here. You do have, really, if we take a look at retracements, let's just see what kind of retracement that silver has done here. This is on a daily chart we're looking at. I'm going to go from the swing point high from February 24th down to the low out here that came in March 10th. You're going to see it's really close to the 0.786 retracement level. $21.84 is the 0.786 area. That should be some pretty strong resistance out there. In fact, if we were to switch down, let's do that. Let me actually just switch over to a intraday chart out here. Let me take a look at maybe a 30-minute time frame. Can I do that? Do I have a 30-minute? I'm not going to be able to do that here that quickly. So sorry about that. We're just gonna skip that with regard to the feed. In any event, silver is running into 0.786. So silver's got a couple of hurdles that it's going to have to overcome in order to truly power on through its resistance level. Now, in the ES Mini, let's go take a look and see what we have going on out here. We are rolling over into the June contract, so make sure that you make that change to your charting system out here. If we take a look at that right now, let's go take a look at the different patterns that we have. I've got the wrong chart up on my screen anyway. So let's I grabbed the wrong tab. You can't do that, Steve-O. You got to grab the right tab out here. So now let's go take a look at the ES Mini, the 30-minute chart. Let's look at the different patterns that we have out here. So I showed you the 1.272 expansion pattern as was making a low out there. There's another pattern that it's trying to form on a 30-minute basis. But first we're going to start off taking a look at the A to B equals CD patterns that we have out here. So the first one, yes, I did say first one. So now what we're seeing here are multiple A to B equals CD patterns to the downside. That's bearish. If we take a look on it, and again, it's a 30-minute chart that we're looking at. So the first one starts off with the high out here, the swing point 9 a.m. That's on March the 7th out there. So that was last Thursday. No, that was last Friday. Today's March 14th. Last Friday out there, Jobs Friday. So 18, 80, 50, that's your A point. Your B point's going to be this little swing down here. Took place 11 a.m. That is on March the 10th. It got down to 1858.75. Moves up. Makes a retracement at 11 o'clock in the morning. A lot of things happen at 11, huh? 11 o'clock in the morning on March the 11th. The 1 to 1.272. Take a look at that. The 1 to 1.272. In fact, let's just get rid of all the other lines out there. Let's just make this the 1 to 1.272. Take a look at that. That projection, 1847 and a quarter. What we saw take place, it got down to 1846.75. That took place on March the 12th. So that was the first A to B equals CD to the downside. Let's go take a look at the second A to B. Remember, that was a 1 to 1.272. The A point is going to be what was our C point of that first A to B equals CD. That price, again, 1875. You're going to go from there down to the swing point low that came in at 10 o'clock in the morning on March 12th. That was at 1846.75, all the way up to where the waterfall cascade began. That was yesterday at 10 a.m. So a little key reversal session there as well. So you had a bearish engulfing, you had a key reversal session at that C point. Take a look at how price just simply careened down here. It completed, and really going into yesterday's close at about 4 p.m. I'm talking about the stock market close, not the futures out here. Makes a 1 to 1 A to B equals CD, but that was telling you that it wanted to do more. What does it do? It makes also a 1 to 1.272 A to B equals CD to the downside. We'll just put that in there. We'll get rid of everything else. Let me see if I've got one that's a little bit darker than that. Yeah, there we go. Dark blue on that second one. 1832 was the actual 1 to 1 A to B equals CD. It got to 1832.25 out there. Now, so we've got A to B equals CD patterns. If we see a bounce today, if we take a look at the other two bounces that we've had out here, let's take a look at retracements now. That if we go from the swing point high, on the first one, the B to C was about a 0.786 retracement. Let's take a look at the next one. Was the next one a 0.786 or 618? Next one was a 0.786 retracement as the market got back to 1868. So if we are to see a retracement of this leg here, let's see what that outcome might look like out here. You might be saying, hey, Steve, how can you have a retracement? Folks, this is the beauty about a market that is rolling slow here. If you didn't get a chance to get in on any shorts, you're going to have all kinds of opportunities, especially if this is a longer change, longer-term change in trend. I knew I could actually get that out there. So what is it that you should expect on any kind of a bounce? I'm not saying we're going to get it here just yet because we're going to go take a look at the currency pair. But if we do, and we should see some type of bounce here in the next couple of days, that's today and or on Monday. Number one, you ought to expect at least to move up to 1845. You're at 1837 right now, so that's not a big deal. More likely, I would have to say that instead of being able to get back up to the .786 areas, as we've seen on the last couple of bounces out here, I would have to say you have to start keying in on that .618 retracement level, right around the 1854-ish type range out there. Now, what else is it that gives us the potential that a bounce is trying to form out here? Well, if we switch over to the Rhodes momentum indicators and we take a look at the 120-minute chart out here. Here's take a look at the 120-minute chart. Let me switch back over to the ES Mini, to the June contract out here. It'll take just a moment. What we're going to see taking place is we've got one of those price relative strength divergent Oh, I thought we had it out there. Well, that's interesting. What the heck happened here? I must have been looking at the wrong contract. Well, hey, skip that idea. I thought we had a price. We do have a price relative strength divergent pattern out here. It's just not showing up for some reason. Let me switch over to the 30-minute chart here. Maybe it'll show up easier there. Give me a moment to switch over to that. At least it was there. I thought it was there. Yeah, there we go. So there's our price relative strength divergent pattern out here. But we do not have a reversal signal out here. So this is just the beginning. It's just simply showing us that we've got price pushing lower, but it's doing it with, in this case here, less relative weakness, right? As price is moving down, that's going to show you weakness in the market here. So it doesn't have the oomph, or at least it doesn't have the oomph just yet. We'll see what happens when the hounds get released as the actual stock market opens out here, the New York Stock Exchange. Right now, in the pre-markets here, you got Aeropostale. They closed at 7:30. They're getting hammered this morning. They are trading out at $6 and change. Liberty Media Corporation, they closed at 126. They're trading at 135. 877-927-6648. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. As I mentioned, Aeropostale, I think that's how you pronounce it. They came out with their numbers out here. Fourth quarter loss. What did they have? 70 million. Man, oh man. So 70 million in for this quarter versus what? Come on, screen, pop up here. 70 million versus 70 million loss versus a 671,000. Holy cow. 600 a net loss. Well, they must have written off all kinds. They must have really thrown in the kitchen sink on this one here. Think about that, folks. They went from a 671,000 loss from the prior year for the fourth quarter to 70 million. Boy, they definitely threw in the towel here. So it's trading out at $6. Let's go see what it is going to do. Let's clean up the chart out here. We'll start from a fresh chart. This is Aeropostale. This is going to be a gap down this morning. This is potentially a I guess it could be a third. Yeah, this could be this is not going to be a 3-gap play. Take a look at this gap here. Boy, this thing has really struggled as you pull this back. In fact, let's put this on a weekly chart. I don't know if anybody is in this equity here that's in the money. Let's put this on a monthly chart out here. Yeah, how about that? So this is, I showed this, my data goes back to 2002 on this, so it looks like maybe that's when that's maybe when it IPO, June of 2002. The actual low, it's a high volume low. How's that for you? October 31st, 2002, 85 million shares. That level has never been tested. Well, I should say it's never been tested until maybe now here. If we take a look at it, it's going to a gap down this morning. It's expected to. It's trading at 602. Now the swing point here, it's again, it's a monthly chart from last month. So the low from last month, February, was $6.04. You're trading at 602 as we speak right now. Doing large A to B equals CD on the way down here, that just puts them out of business. That gets you below zero, so no reason to do that. So it really does look like here what Aeropostale is doing, it's going to go ahead and make a 100% move of a move and come all the way back down to somewhere between $1.56 and $3.56. Another good 50% haircut. That's what it looks like is in store for this equity out here. Also trading to the downside here this morning, we've got Diax Corp. That's just a public offering. We're not going to take a look at that. You've got Intermune Inc. What is that? They're priced out. How do you like to be pricing out your IPO today, day after? Actually not too bad. You want to get it out as soon as you can, right? You definitely want to get it out as soon as you can because we're at market highs out there. Let me see. What do we have to the downside? Let's take a look at what we've got moving to the upside out here. So I've got Liberty Media. LMCA is the ticker symbol. Let's go see what that is doing, what that's going to trade into. LMCA, again, is a ticker symbol. They closed at 126. They're trading at 135 right now, so that doesn't look like that is a big deal. This thing has been in a world of hurt as well. So how about that? So your stock right now in the pre-market that is leading the charge. Let me just refresh my screen out here, clean things up just a bit. This is going to, at 135, it's got a swing point high up here, 135.75 from February 28th. So it looks like it's going to, that's a pretty decent gap out there. Looks like it's going to run into that swing point. No real big volume here, but this thing in a true decided downtrend out here. Let's actually go ahead and draw in a channel line. Again, even the way that I start this off, I just use my line tool and try to identify the largest number of contacts here of opens and closes. You'd almost have to say that probably is more likely the channel line out there that you would use. So that's what we're going to use. I'm going to just go ahead and extend it back. Makes it a little bit easier for me to. And the reason why I've chosen that, I'm using the bar. I'm using the open of the session from October 23rd. That happens to run into the both the close of November 1st and the open of the following session on November 4th. I run right into the open of December 4th. I run into the close of December 10th, and as well as December 11th out here. I run back into the December 30th. So you can see the body is truly the essence of price. You can see how that, in essence, also on this bounce out here has really held as a resistance line. So what Liberty Media is going to try to do, it's going to try to break that current downtrend here today. We'll see if it can hold. Let's go ahead and actually draw in the actual channel line out here so we can see if it can't do that, where it's likely headed to at the lows. I'd probably just draw that in at the moment with the information that we've got, and that is on Liberty Media. As it was coming down into the swing point yesterday, which the February 5th is a swing point that we'd be monitoring. That had 1.8 million shares, and it came in there, tested the low of that yesterday with only 683,000 shares. So not enough at this stage here to bust it down. You know what they're saying? If you can't bust it down, it's going to try to go bust it up, and that's what it's going to do today. But in doing that, it's actually going to try to change this change in trend out here, this downtrend channel that price is traveling in. Just like silver. Silver taking off. I don't know if it's because of what's going on over in Russia, but it's up 2.5%. It's up 55 cents. Gold up $15. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. But nobody's out of the gate. The Dow's up 3 points, straight out at 16,111. S&P is down 1 at 1845. Composite is down 8 points. It's down at trading out at 42.52. Russell 2000 off a couple points. Apple down $1.68. Leading the charge the upside is Liberty Media, up about $10 right now. Alta Salon Cosmetics. Haven't looked at that stock chart in what seems like forever. ULTA is the ticker symbol. They're out with numbers here. Looks like their fourth quarter sales, $868 million versus $758 out there. I wonder what their same store sales are doing. Doesn't matter. They are trading to the upside. Net income is $70 million versus $64. They are trading up about 8%. Amazon up $4.50. Now, Amazon had an interesting day yesterday. It was trying to break above a B point with volume. It had the volume, didn't break above that. So with a high volume bar yesterday would make sense that it's going to try and go test that area. You've got Green Mountain Coffee Roasters. That's up $2. Harvard Apparatus up 16%. HART is the ticker symbol. We might go take a look at that stock chart. Don't know what they do. Let's actually see. What does Harvard Apparatus actually do? Regenerative technology, clinical stage, regenerative medical medicine out there. So that's what they're in. You've got Google to the downside. It's trading off $6. Pharmacyclics, PCYC, down about 4.5% off $6. Celgene down $5. Baidu off a couple of bucks out here. Gilead Sciences, GILD off about $1.91. Tesla down $2.60. Let's just go check in on Tesla out here. I doubt that it formed that island reversal. Well, there's a number of stocks that we're trying to pay attention to. In fact, if you have one that just simply isn't on our list out here, please give me a call, send me an email, steve@tfnn.com, anything just to pay attention to it. Here's a stock here. You may remember this, T-Rex. This had a heck of a breakout session, a high volume bar on February 24th. And notice how this is coming back to the breakout area. Now, the breakout session high was on February 21st. The top of that candle, 68.67. On that trading session, 287,000 shares. And yesterday did 223 on the pullback out here. Folks, if this market could turn, this would be a nice looking stock to because what we have out here, this thing wants to go ahead and make a large A to B equals CD to the upside, take it to 103. Now, the only problem is that It should at least at a minimum go back and revisit the $82.58 mark out here. So this thing has pulled back nicely. Anyways, that was not the stock that we were looking for. I was looking for Tesla out here. It's not on that tab. Let's go try this tab out here. Do I have? I might have Tesla in my core holding or any my core stocks to be focused on and paying attention to. So let me switch over to that tab, and there we go. So here's Tesla. Yeah. So nothing yet. Then what we want to watch here is clearly sexy stock out here, but it's got one of those dangerous potential patterns out here, and that is if the something goes bad, let's say over the weekend, what are the chances of that taking place, or whatever it is. Is that what Tesla's got up here at the highs? This is where I would be. If you were in Tesla, you'd be starting to say, maybe, and if you were in it and you had a bunch of profits, you'd start saying, I wonder if the reward to risk is worth it for me. Rather, do I sell and wait and see if it's going to just simply continue to move higher or what? Because any type of gap down didn't take place today. Right now, below 228.45 sets up one heck of an island reversal pattern out there in Tesla. Not saying it's going to happen, just saying that, if you were long, it's not the pattern that you'd want to see out here in the market, especially the market that has been trending lower and seems to be turning out here. I think there were a few others. Let me go see if we can... I know there's some others. I've got them written down. There was Aeropostale. It's not Aeropostale. And VIPS. So VIPS, that is another one that we want to be paying attention to. We're looking at these high-priced stocks out here. This one actually formed a little bit of an island here really yesterday, but we're looking for the larger island. What I mean by that is if you take a look at yesterday's trading session, this thing went ahead and gapped up. So the prior day on March the 12th, this traded down to a low of 142.50. The high of that session was 148.75. Yesterday goes ahead and gaps. Well, let me refresh this screen here. I might not have all good data. There we go. I didn't. So there was no little. Ever since that system of mine shut down, I've got to. It looks like I almost have to go and rebuild each of the charts out there. Man, I hate to do that. In any event, this thing here today. So we're just again $190, $140. Right now it's trading $140, but this thing got up to 182. Even hey, how about that? Didn't even recognize that. I'll have to ask Basil about that. This is one of his round number highs out here. VIPS is the ticker symbol. You like the types of stocks that you like to short are the real expensive ones because then you got some real opportunity to the downside out there. This thing could form a island reversal pattern. Can't do it today, but maybe on Monday morning. Right now, we got the Dow up 21, the S&P up 1.5 points out there. Let's go back in and 9:30 in the morning. Let's go check in and see what kind of candle is being formed, if any, on that June contract here for the ES Mini. So right now, this would be a hammer candle. You got that price relative strength divergent pattern. Let me just reload this here. So I've got a nice clean chart out here. So you've got where price is the ES Mini. It's the 120-minute chart out here. So we've got where price is pushing lower. It's a beautiful pattern. You got to love these patterns. You're just waiting for a signal to confirm out here. That signal will be some type of bullish candle right here at this stage. And if you're watching us on TigerTV, you can see my system is interpreting the data here and trying to identify what type of candle will be forming. Now, this session here closes at 10 o'clock. So we've got 20 minutes. This has 20 minutes now. This would have to form a bullish engulfing or bull sash candle. It could do that with a close above. Give me a moment here. With the close above, what is that? That open was at 1843. So at 1843 or higher, you're going to have a bullish reversal signal. And, of course, right now at 1842.50, you'd have a little hammer candle out here. So we got 20 minutes for the market to go ahead and give us an interpretation. Now, this is one of those things where this is what you should expect. You should be expecting, at least this is what I'm expecting, they should be expecting a bounce to market. Now, because you're expecting that, I say you don't take the viewpoint that the selling is over. That may be what it is that gets reported in the news media or what have you, but I can tell you that the bears have got control of the session out here. On the New York Stock Exchange, the bulls could change my mind. What would they need to do in order to change my mind? Well, number one, And I'm glad you asked me that question, so I'm going to have to give you an answer, right? Number one, I'm looking for the data. Number one, you'd have to have more than 2,305 net advancing issues today. That's a doable thing, quite frankly. So if we saw that, that would certainly make you have to say, well, that would not just have to make you say, that would tell you that the Bulls actually took back control. I don't think that we're going to see that. The other thing you need to do is you need to see you would need to see the VIX index close below the 50-day exponential moving average. And if we go take a look at that, see what that looks like out here. The VIX index right now, it's trading out at 1633. Nice big session yesterday. The 50-day exponential moving average is at 1479. So we have seen now twice this week. Once was on Turnaround Tuesday. Once was yesterday, where rallies have been sold. And that is the market that I believe that we are in as we speak here right now. Today's trading session is important, most certainly. I am suggesting that what you do is you look for places to enter on the short side, not to try to say, hey, this is a buy the dip here, because the dipsters have gotten burned at least twice this week here, and I do believe that is until we see some other signals, some clear signals that the Bulls have taken control. This is one of these markets here where you now want to try to reverse your thinking, and you want to take a look at where is it that you should be selling this market. And you should be expecting bounces. You should be expecting some significant bounces all the way down out here until we see signals that suggest that the Bulls actually do have the ball back. So you got the Dow up 32 points, the S&P up 3 points, and when I began the show, I was beginning the show taking a look at, okay, looks like we might have a bounce here. And at that stage, if you were of the thinking that, what the heck is this guy talking about out there, maybe you should go test out Mastering Probability. All of the, not maybe, how about you should go test drive it. You can do it 30 days, unconditional, money-back guarantee, all kinds of education hours out there, and we make money. So that's a good thing. Let's go take a look at what's going on inside the commodity sector. So you got Goldilocks and silver taking off. We covered silver at the open. Here we've got gold trading out at $13.85. Pretty decent volume so far behind the move, 92,000 contracts. It's up above the 0.786 retracement level here. A little bit of potentially the top of the rising price channel out there, but I wouldn't exactly say that is the most cemented. The bottom line I'm very comfortable with. The top portion here, and with price breaking above that area, it's really not a breakout, right? Price is already moving up higher, so you can't break out of something but you're already breaking in a direction that you're already moving in. So hopefully that makes sense. So what do we know about Goldilocks? Well, it is up above the this little evening star reversal candle signal here. This was a bearish pattern. Old resistance becomes new support. The high on that, we'll see if it closes up there today. The high of that session is 1375.40. You close above that, it says you go float all the way up to the next swing point. That takes you all the way back into the August 28th swing point high, and that's up at the 1434 to 1413 level. That is on Goldilocks. We looked at silver earlier. Let's go take a look, at light sweet crude. If we take a look at light sweet crude, not much of a bounce here. It is trading up, about 57 cents right now. This had completed an A to B equals CD to the downside 2 days ago, and ever since that time period has just simply, and it was in the extreme oversold condition, it has just simply been moving sideways. So I would have to say there really is nothing bullish here about this pattern when we take a look at light sweet crude. If we look at bonds here, let's go see what bonds are doing. You got bonds that had formed that nice 0.618. This is the daily chart for the continuous contract. Formed a nice 0.618 Gartley buy pattern. It has reached now its third outcome. Remember, there's 5 outcomes of any Gartley pattern. The first one is the dead cat bounce at 0.382 retracement. It did that. It sliced through that area yesterday. That's a 0.382 coming into the 0.618 area. That's your second outcome, and it did that with a wide-ranging bar. Third outcome is and that told you wanted higher price. That's what we saw thus far this morning as it made its way up into that 0.786 retracement level, which is in the 134 range. So far we've seen a high of 134 out there. The next outcome would be the 100% move of a move. That is where I would expect to see the 30-year Treasury to run into some significant resistance out there, and that is nothing more than a huge consolidation breakout. Now, if bonds are able to close close above into that level, which is into the 135s. I'd say it needs to close inside 136. And I can't say that the long bonds short the market is the pattern that's still in play out there, but it could be. And if it can close above that type of a resistance, huge resistance that it has up there, that will really be telling a story out there. So that's what's going on inside the 30-year Treasury. Natural gas, let's take a look at it. Right now, natural gas is up, about 2 pennies out here. Not a big deal. Natural gas taking out a B point yesterday. Let's see what kind of volume. This is the, what have I got? The April contract up on my screen here. The swing point for the B point that we're looking at. So the B swing point, the low is 4.44. You had 166,000 contracts on that session. You took it out yesterday with 117. So maybe this has got a nice little Gartley, a Tiger Gartley pattern set up. Nonetheless, it did take out a B point. It's trading, in essence, below that level here. It says probably $3.96 is where natural gas, the April contract, ought to be headed to. Let's take a look at some of the world markets out here. So we have going on inside of the world. The DAX here, just because that candle is green, that's not bullish. That just tells you where the DAX opened, and the DAX here gapped down this morning. It's been working its way up, but that is not it's not a bullish candle. It's actually more bearish than it is bullish. Now, the DAX is going to be interesting. This is the daily chart, and this chart here takes us back. You can see this rising price channel into the significant low areas that were formed back in August of September 2011, both August, September of 2011. That's the black diagonal line we've got going up on my screen. You can see how that is really held as a nice area of support. We did get a little bit of turbulence through that area back in the June time frame of 2012, so it did trade slightly below that area. We're going to see if that is going to hold as a support level. And that will also, you can see price here inside the DAX. It is also moving down into a oversold level out here. That being said, we'll see if that area can hold as support. That area, you say, hey, where is that? It's probably right around the 8800-ish, 8810, 8815, somewhere right around there. That's the daily chart for the DAX. So we'll get some information here, not today necessarily, but we'll get some information over the next couple of trading sessions, whether or not that level can hold. If we take a look at the FTSE, let's go see what's going on over in the UK. It, too, has a rising price channel. Now, this happens to be the weekly chart for the FTSE. Let me go ahead and update this. This is the, so this is interesting because this is the weekly chart that takes you all the way back into the 2009 time frame out here. And it looks like the low of that rising price channel is going to be tested out here. Dow is up 25, S&P up 2. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow is up 11 points. S&P flat up here, out here, trading up at 1846. Composite is off 6 points. So we go back to that 120-minute chart for the ES Mini out here. No bullish candle whatsoever. So this time frame for this specific candle ends in 6 minutes. So, the bulls would really have to step on the gas here in order to give an indication that this is a reversal pattern. So where are we? I say there's two potential intraday trades that I can see here at the moment. The first is to the downside would be if we were to see a close, and let's say I'll use a 30-minute time frame. On a 30-minute bar, you close below 1834, probably 1834.50, but right in that range there, and the selling continues. So that 1834 area, 1830 for sure, but I'm going to say probably close below 1834. You're at 1839 right now. All of a sudden, you should see perhaps a onslaught of selling inside of the market in the ES Mini. Likewise, you get above 1845. Okay, which is so far the intra-session high on this bar here, 1845-ish, and maybe you start to see more of a bounce out there. So right now it's really in between, so there's really not much of a trade, other than if you're out in a trade, just make sure that you are properly adjusting stops depending on what your outcome was. So right now, with the market being really kind of flat, it's also giving you, your trade up. I think those are pretty good parameters. I don't think so. I know they're really good parameters to be using out here inside of the market today. What else do we want to take a look at? Let's go take a look at here. This is kind of interesting. If you take a look at the Nikkei here, now gap down, big volume, but what it is doing, it's Well, I don't have the volume. My apologies. I don't know if it had big volume. It had wide price spread, that is for sure. I would assume it had volume in the marketplace. And what it did was it closed inside that February 4th swing point. We were looking at the DAX earlier. We were looking at the FTSE on a weekly chart. And what that is doing, that's the FTSE is trading already into the February lows out here. So it shows you our market here much stronger than what's going on around the world. But the question is, does that mean, hey, we're gonna head back to that to those levels as well? And that could be a pretty decent indication that we will. Inside the Hang Seng out here, boy, this is a problem for the Hang Seng. Let me refresh this chart out here. This coming off of the 2009 level. This is the first time coming off of the 2009 level inside the Hang Seng that we actually have a close below its rising price channel. Now, it's not exactly like it's a huge close below the rising price channel, but it is a close, and that's going back from the 2009 time frame out here. So we'll see what happens over the weekend as Monday opens inside of the Shanghai, but inside of the Hang Seng. I did say the Shanghai, right? So we might as well go take a look at the Shanghai and see what it is doing. Let me refresh this screen. So this had formed a nice Gartley sell pattern out here. A nice point, almost a 0.786 Gartley sell pattern. This thing here really kind of traded somewhat sideways and flat out here. It is also back at it. Let's see, it's back at its January lows out here. Looks like this is really just kind of sitting here. It's made that 100% move of a move. Remember, we say there's a fifth outcome. There's 5 outcomes of any type of Gartley pattern. Well, the 382, 618, 786, 100% move of a move. Well, guess what? The Shanghai has made 4 of the 5. The fifth one becomes the A to B equals CD to the downside. And based on the way that this is traded along that C to D leg, it looks like that is exactly the message here of the Shanghai. That says the Shanghai ought to trade down to about the 1997 level, and it is not oversold. So it could easily do that 1997, or it could actually make the 1 to 1.272 A to B equals CD. That would take you to about 1920 out there. Folks, it's been great to be with you all week. Have a fun weekend, a nice weekend, a safe weekend. Share, be generous. Hey, tell 5 friends about TFNN. Tell them to turn in at 9 o'clock in the morning. You know, we're on 24 hours a day. And have a great weekend. Look forward to seeing you Monday morning. Stay tuned. Tom O'Brien and 8X Bull Bear binary option will be up next. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.